And good morning, everybody. It's Dan Latto speaking. Hope you're well this morning. We seem to be going live every day, which is completely not what I was supposed to be doing. Anyway, welcome to the Property Cashflow Show. It is a Wednesday. We're supposed to do it on a Wednesday. It is a Wednesday. It's 7:30 in the morning if you're in the UK, but that's fine as long as we get them done. Who the heck cares? So, in today's session, we're going to talk about why tax is pushing up rents. We'll go on to that quite a bit. We're going to talk to you about the day in the life of a landlord. It kind of occurred to me that I've never really talked about that, what the day-to-day thing is. Obviously, we live in Spain, so things are a bit different here. So I figured that should be like a little section just to kind of show people the stuff that we have to deal with, that they're kind of unaware of sometimes, I would say. We're going to talk about whether you should keep on buying more property or paying down mortgage debt. It's a question that gets asked quite a bit. And my answers have changed as I've changed and progressed through my landlording career, let's say. I don't really like to call myself a landlord, so my property investor's career. Maybe we should talk about why I don't like to call myself a landlord. Maybe we'll include that. And then finally, we're going to talk to you about getting started on property because obviously some people want to get started on property. They have no idea what to do, how to do it, what bit to do first, how to find deals and so on. So we're going to talk about that a little bit. Again, we've got painters coming at 9:20, so we've got about 40 minutes to get through each one of this. It's probably not enough time when I think about it, but there you go. Okay, so let's talk about tax and why that pushes up rent. So one of the things I really, really enjoy, and I don't know if I've got a streak of sadomasochism inside of me, but one of the things I really enjoy is getting into arguments with people, nameless, anonymous people on Twitter or on Reddit or on Facebook or whatever, about landlordism, the rentier type person, which obviously I am. The what do we call it? Who's the really bad landlord in Rising Damp? Anyway, that landlord, Rigsby, the Rigsbyism, and so on. So I like to talk about tax because people go, oh, greedy landlords always pushing rents up. I'm like, no, you know, it's because of Section 24 tax, right? And they're like, by the way, they never go, what? Ever. They never do that. They're always like, silence. Because then they don't know what Section 24 is. I've done this with MPs, and I'm like, you do know what Section 24 is, right? You do know that you voted to increase rents. You know, your party increased rents through the taxes. And they just don't get it. They just don't understand it. They just talk about greedy landlords because it's a nice little thing to fling out there to direct the blame elsewhere. And if Boris and his cronies are any good at something, not a lot, they are good at redirecting blame. And, you know, whatever happened to the second jobs thing that was a big thing a couple of weeks ago? All completely hidden. Let's go kill a couple of people through COVID and lack of anything in terms of guidance. Oh, look, I've completely forgotten about that. Anyway, so why does tax push up rent? So obviously we've got Section 24, and this means that in the past, if you were earning £1,000 a month on rent and your mortgage was £700, you could deduct the £700, and so your profit was £300. Let's just forget about maintenance and service charges and ground rents and all of that extra little bits about, you know, cleaning and all that stuff. Let's just keep it nice and simple. So if you're earning £1,000, your mortgage is £700, interest aspect only, not the repayment part. Maybe your mortgage would be £500 at that rate, right? But let's assume it's £500. 1,000 minus 500, you're taxed on the other 500. Whereas now you're taxed on the whole £1,000. Now, if you're a 40% taxpayer, you're paying £400 on that. So not only is your mortgage £500, you're also now paying £400. So now you're making £100. Now, if you need the £500 to live, because that's the money that you live on, you've got to increase the rent. It's as simple as that. Now, some people think that tax increases have zero to do with the increase on rent. And it's like, how on earth could that be? Obviously, if a landlord's being taxed more and they want to maintain the same level of profit. Now, they might not be able to maintain the same level of profit. They might have to take a hit on that profit. And even worse, not just take a hit on the profit, they're going to have to start making a loss on that on that property investment. So what do you think's going to happen? Do you think the landlord's going to go, oh, it's fine, don't worry about it, I'll just take the hit? Of course not. But why would anybody have an asset that doesn't pay them money? That's not an asset, it's a liability. Remember, Rich Dad, Poor Dad. Rule number one, an asset is something that puts money in your pocket. And it's true. An asset is something that puts money in your pocket. But if you're losing money, why on earth would you keep the asset? And then you get other people going, oh, I think it's disgusting that rents are more than mortgages. How do you think landlordism works? Why do you think the property is there in the first place for you to rent? Like, landlords are not doing this out of the goodness of their heart. I mean, don't get me wrong. There's nothing better than being able to provide a nice house to a lovely person. We got a text yesterday, which I put in a mastermind group on Facebook, and it was from a landlord. He said, not going to lie, the property's lush. Love, because I asked how the house was. Not going to lie, the property's lush. Love living here, right? So that gives me a nice, warm, fuzzy feeling. But if I was losing a couple of £100 a month on that property, do you think I'd be doing it to get a text like that once every 6 months? Of course I wouldn't. Well, it just doesn't make even sense. Would you go to a job where you had to pay your employer? Of course you wouldn't. So this is the problem with tax. And fine, there's tax situations. I love this saying, by the way, don't blame the player, blame the game. When we talk about wealth creation and you get people who hate landlordism and they hate people making money and they hate rich people. Oh, rich people. And it's like, what do you mean rich people? I think they really mean the people at the upper echelons. Like in America, we've gone about Elon Musk not paying his tax. And that dude's paid £11 billion in tax, the single biggest amount of tax ever that a single person has paid. And they still hate this guy. This guy could turn water into wine, walk on water. This guy could save humanity from doom, and they would still find a way of hating him because he's wealthy. And he's wealthy because his share prices have gone up. It's not even a realised gain, and they're going, oh, he doesn't pay tax. You can't tax an unrealised gain. His wealth goes up and down daily, as does mine. If property prices drop 20%, I don't pay more or less tax based on what the value of my house is worth. I pay tax on what my income is. And anyway, the government has changed the way that the tax thing changes. That means that some landlords are now having to pay more money out than money than they're receiving, and landlords are going, oh, something doesn't add up there, maybe I'll just sell the damn thing. That puts the property back on the market. That reduces the amount of size of available properties. Like if you go to Leeds on Rightmove, LS1, 2-bed apartments, there's like 6 properties on there. If that. Depending on what it is. There's hardly anything to rent right now. The reason why there's hardly anything to rent is because the tax increases have pushed landlords out. And unfortunately, the lower the yields, the less property there is. So this is what happens, interestingly. If you've got a lower yield, so if you've got a big flat, like I've got a flat worth 250 grand in the centre of Leeds, right? It's a really nice grade 2 listed penthouse building, right on Park Row, right slap bang in the middle, beautiful place, and it's worth about 250. So the higher up the property value, generally the lower the yield. That's generally how it works. You get better yields at the bottom end, but then you get really scuffer tenants, and that's not really what you want. And so, yeah, it's a better yield, but then you've got so many more problems, and the property's empty longer, and so on. So you've got to find a balance between really high yields and decent yields. But the higher up you go, the smaller the yields get. And so what happens is that because it's got lower yields and because of Section 24, those landlords at the upper end are actually affected more. So what happens is they're now selling those, which means that these properties at the upper end, we went from £1,000 a month to £1,300 a month, right? Like literally the transition of the last tenant, and we've done this on 2 properties in the same building in the last 6 months. It's gone from about £1,000, £900 up to £1,300, £1,350. And so there's less of these higher end properties, and the people who are used to living in higher end properties that still rent, because those people still exist. My last tenant was a heart surgeon at LGI or St James's or wherever he happened to work. But those people still exist. Just because you're on a lot of money doesn't mean you don't want to rent. You move around for jobs and all sorts of different things. Contracts and all sorts of different things. So those properties that are higher yields, the rents on those have actually shot up higher than the properties that are the lower ones. I've got properties worth maybe 70 grand, or probably about 95 grand now actually, because the prices have shot up. But their rents have gone from 500 to 550 to 600. Obviously, that's still, 10% uplifts, but 15% uplifts. But it's not as much as the 30% uplift on these higher ones. And so all these tax things that are happening, all of these have implications further down the line. And then you go on Twitter and people come out with the graphs from the ONS, the Office of National Statistics. And it's like the ONS are complete and utter liars about what's happened. They were saying rents had increased 1.4% or something in the last, not this year, the year before. And I'm scratching my head going, 1.4%? Mine have definitely increased more than that. And again, this year they've increased more than that. And I'm hoping they'll increase again much more than that next year, because that's how we increase our wealth. And then the cash flow that we get, which we're going to talk about a little bit later, but that cash flow we can then put to good use to generate more cash flow, pay down debt, buy crypto, move it into ISAs and that kind of thing. So, and I know, by the way, because I've ran the numbers, but my rental income has increased by 46% since January 2010. So, that's in 12 years, just coming into the 12th year. So call it 11 years. Give another 11 years, I will be very, very happy with a 46% increase, but I expect it will actually be higher, like 60, 65%. I mean, I will be very, very happy with that. And obviously, that's then just going to piss off the people who claim we're rentiers because we've done nothing extra for that work. And you're absolutely right. We took the risk 23 years ago when we had no money, when we lived on potatoes and beans for a whole month. And people go, oh, no, you didn't do that. Of course we bloody well did. How do you think we got into property? It's not easy. If it was easy, everybody would be doing it. Or, if it was easy, everybody who wanted to do it would be doing it. It's not that easy. I wish it was that easy, but it's not that easy. We had to make big, big sacrifices to get onto that first deal, and the second deal, and the third deal. We took massive, massive risks, and we got there. But all these people who hate landlordism and rentiers, you're just increasing rents for no reason. Well, Section 24 is a really good reason, and that's the reason you've pushed landlords out. And then, the funny thing is that you get these same people going, oh, we should tax landlords even more. They don't deserve the money. Well, let's tax them out. Tax them to the hill until they have to sell. And it's like, but that's what's already happened. And now you're moaning that rents have gone up and you want to do the same again? You want to put rents up again? It doesn't make sense to me. But then you try and explain this to people, and then they come out and go, oh, well, Adam Smith said in his book in 1826, oh, Keynesian economics says, well, Marxism determines that. And I'm like, dude, you got a lot of big words, but you got no fucking clue. You might be well-educated, well-read. How many landlords have you spoken to? What's your experience in property? Oh, well, I've rented property for 12 years. What, one property? Oh, that must make you an expert then. Let's get you on the telly. It's ridiculous. Oh, I do enjoy a good rant. I hope you enjoy my rants as much as I do, because I thoroughly enjoy them. Anyway, that's why tax is pushing up rents. That's why it's causing a problem. That's why tax will continue to push up rents. We've got this whole issue going on, of course, with Brexit, and lots of European people have gone home, sadly. But then there's a shortage of nurses, and there's 100,000 jobs available for nursing that they can't fill. And then there's all these, fruit pickers, and all these pigs had to get slaughtered because there was no one actually to come and do the pig meat thing, whatever it happened to be. And so that's causing issues. And now they're talking about bringing people in from India. And it's like, so you stop people coming from Europe, now you're bringing people in from India. Like, I don't mind where you bring people in. But I'm just intelligent enough, experienced enough, dumb enough, I don't know, call it whatever you want, to understand that we need lower paid workers coming in to do the jobs that people sat on their asses in the UK housing, paid by housing benefit, don't want to do. I'm just aware of that. So maybe that's why, of all these landlords have gone out and we've lost people, but rents have gone up because more people are coming in, or there's less properties. Who the hell knows? But it's a good combination. I talked about this 5 years ago. We said exactly this at exactly this time. When that final tax return goes in at the end of Section 24, those 4 years of taper relief, final tax return goes in, we're going to see dramatic rent increases. And I said it was 50%, and it wasn't as high as that. It's probably 30%, 40%. But it's a damn good guess. Compared with Savills, who go on about rents going up 4% a year for, it's just like, what are you talking about, Savills? The fact that you work for Savills, do you know what you're talking about? Have you got any actual real-life experience? Because it's the real-life experience I would put my money on. And more importantly, I would put my money on my real-life experience, because it's me that's at the coalface touching what's going on with property prices and valuations and tenants and what they want and so on. Even though I'm 1,000 miles away, I'd rather put the investment into my knowledge on that than what Savills are saying or what the ONS are saying, because these guys are bald-faced liars. And they're bald-faced lies because A, they don't know what we're talking about, B, they think they know what we're talking about, C, they've read lots of books with lots of long words by Adam Smith and Keynesian and Marxism, and D, they don't own property. They work for the ONS or for Savills in order to generate a cash flow income. How about you get rid of that and you go buy property and you live off the proceeds from that? Trust me, your level of expertise soon increases rather dramatically when your entire future depends on your ability to rent out property and manage tenants and all the rest of it. Anyway, good old rant there. Hope you liked that. So moving on then, let's talk about the day in the life of a landlord, because this is something that I recognise I tend not to do that much. I don't really talk about it. I don't talk about the day-to-day. So like yesterday, we had a really busy day. We've got stuff going on. I woke up to a very exciting email this morning, which just pissed me off, which I'm going to talk about now. So we've got a couple of things we're going to talk about on this one. So for example, we've got a tenant right now who's not paying rent. And you can generally, when a tenant doesn't pay rent, it's not generally that they stop paying, and that's it, nothing else. You can see them falling into the abyss. And so it's, the rent comes in and it's £100 short one month, and then it's £200 short, and then it's £300 short, and then they catch up, and then it's £100 short, and then it's £200 short, and then it's £300 short, and then they catch up. Now, when you see that happening, I can pretty much, with about an 80% certainty, let you know that that tenant is going to miss rental payments, and you should actually issue. I actually think from this point onwards, we're going to actually issue when we see tenants doing this form of behaviour, because we know what's coming. And it happens all the time. Like, I would say 80-90%, quite frankly. But we know that this tenant is then going to default on their rent. So anyway, we've issued eviction notice, Section 8, for being more than 2 months in arrears. That's all gone. We're just waiting for an eviction date. And then, in addition to that, because this guy... And by the way, that cost me £1,000 to do that. So we had to pay out, first of all, for Section 8, which is like 70 quid or something. And then we had to pay out £1,000 for the solicitor and for a court date. And so instead of money coming in, it's now money going out to actually evict this tenant. And it's like, what do you do? Do you not evict and then not get paid? Or do you just have to bite the cherry? I don't know what that phrase is. You have to bite the whatever it is, and spend the money to evict this tenant. So we're now waiting for an eviction date, a court date. Not even an eviction date. We're waiting for a court date. Yet more costs on that once that happens. But in the meantime, what we've actually done as well, at the same time as evicting and waiting for a court date, we've actually issued a money claim online for the missed rent and for the £1,000 worth of costs. Now, what happens is that sometimes we don't get this money back and we never get this money back, but it's worth doing because it gives them 14 days to put in a response to the judge to explain why they haven't paid. And then after that, I can request a judgment. Now, they, on the very last day of those 14 days, can request, at any point, they can request further time. But on the last day of those 14 days, they then requested another 14 days. So we have to wait another 14 days. So once we get that, I'm sure they'll put in a defence, but there's not a lot of defence. There's your contract. You've not paid the rent. There you go. So we'll request a judgment. If we have to turn up, we'll turn up. Or I'll have a representative turn up because I'm not flying over. I've done that once before and it was a waste of time, so we'll just send somebody. It's cheaper, faster, quicker, easier, and so on. And then we'll get money claim online. And then what happens is we move it up to the High Court and then we instruct bailiffs. And that's basically the eviction process all the way through. Very, very rare do we actually get to court. Usually the tenant has left by that point. And really that's all we want. If we can get the tenant out, we'll deal with chasing the money up later on. We might wait 5 years because you've got up to 6 years to chase the debt. So we might wait 5 years and then in 5 years' time do a location search on them and then send bailiffs in 5 years when they've forgotten about the fact that they owe always, thousands of pounds, and a bailiff turns up at the door ready to take their car or whatever because they've forgotten about it and moved on. But I've not forgotten about it because I'm like an orca whale where somebody owes me money. I'm like, oh, you owe me money. We will be after you. And that's just the process that we have. But like nobody really talks about this while you're going through it. But that's the process that we follow. And it's right now we're waiting for both a court date for eviction and we're waiting for the 14 days to expire so we can get a judgment on the money claim online. They're two separate things. They both serve different reasons. One of the things that I have learned is that as soon as somebody gets court papers, generally they leave. Now, you might get some tenants who dig their heels into the ground, and that's totally fine. They're entitled to do that. We follow the law to the letter. We're big believers in that. I'm also a big believer in transparency, so we explain to the tenant what's going to happen to them and what their life will be like. And it's not a pleasant, because you owe me money, and it's not like a tenner. You owe me thousands of pounds of money. And for me, I think that's theft, right? So we go after them, we use the full extent of the law and the bailiffs and the High Court and all the rest of it, up to the full 6 years. And it's like, you might as well just pay up, because you're just about to ruin the next 6 years of your life. And it's not pleasant. So, but you owe me money. What are we going to do? Just ignore it? So, that's the 14-day Mcall. We call it an Mcall, money claim online. Now, if you've never done an Mcall, by the way, you should do one. Go sue somebody. Go just run it out and see how it goes. It costs like 60 quid, depends on how much they owe. I think it cost us £105 because they owe us thousands. But as a landlord, are you gonna sue people? Now, in the olden days, we actually used to issue Section 8, Section 21s ourselves. We don't do any of that now. We actually just get a solicitor to do it. Because if it's wrong, and it's really easy to get these wrong, you got to go all the way back to the start. And I've done this where I've done it wrong, went to court, and it was wrong. We had a tenant who was earning £2,000 a month, didn't want to pay us £500, so we issued a Section 8, went to court. Shelter turned up to help defend him. So this is one of the things that really annoys me. Shelter turned up to defend a guy who's earning £2,000 a month, but just doesn't want to pay his rent. And Shelter turned up to defend him. Now, we got something wrong on a Section 8, so we got thrown out of court. And I flew over for that one. That's why I just don't bother doing that now. So that's fine. Good learning lesson. When I used to own my lettings agency, I got one of my team members to do it, and they've been on all the courses. And I'm useless at filling in forms. Bloody hate forms. I've still got these bloody forms on my desk that I've got to fill in for this bloody junior pension. But I'm dreadful at it, right? So now, from that experience, we just send it over to the solicitors. It costs us 80 quid. And it's like, oh, just do it. Just do it. At least it's right. 80 quid's the cost of my return flight, let alone hotels. And let alone time spent having to go to bloody court and all of those kind of things. But we are quite litigious these days. I don't mind being litigious. I've lived in family court for 12 years. I was there in a corner with my sleeping bag because we was there so often. We're not fussed about that. But if you've never done court before, it's really nerve-wracking. You go into a waiting room and everything's grey, and there's even the clouds following people around are grey. It's one of the most depressing places on the planet is a courtroom waiting room. But if you've never done it, you should experience it, because this is about you getting a world of experience. What else happened? So this morning we woke up to legal threats from a management company. At the moment, obviously, everyone's aware of Grenfell, which was the big fire in London because the cladding was of unsafe material. So we've got some works going ahead in an apartment I own, and they've got it's actually not cladding, it's actually to do with terraces, not made of wood, but terraces that have concrete on. It's all got to come up, and it's all got to be resolved because the stuff that's underneath it is unsafe. It's in breach of latest fire regulations. So anyway, I get an email this morning from the management company saying that I've told the tenant not to allow them access. Now, obviously, I wouldn't do such a thing, and I've explained to them that's not the case. But they've also said that if that tenant doesn't provide access, they will have to sue me, and costs are in the region of £10,000 to £15,000. They can't sue the tenant because their contract is with me. My contract is with the tenant. So what happens is they sue me and I have to sue the tenant. So needless to say, I've sent the tenant a rather direct WhatsApp this morning, knowing that it's early morning, because I woke up and pissed off. They should wake up and be pissed off. Basically saying, you need to do this, if not, I'm going to sue you, plus you're going to be evicted, blah, 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 blah. So hopefully we can get that sorted. But this kind of thing happens. And it's not the management agency's fault. They have to send me that letter. They need to let me know what the consequences are should this tenant not provide access. And the reason why the tenant has to provide access is it's necessary, it's urgent, and it's fire safety, as we all know what's going on with fire safety right now. So it's got to get done. It's not negotiable. Is it inconvenient? Of course it's inconvenient. Life is inconvenient. Me having to stop to cross a road is inconvenient. It's just life. It's just part of it. If he owned that property, he would still have to provide access. Just because you're a tenant doesn't give you special superpowers, meaning that you don't have to provide access for fire safety when it's urgent and necessary and required and part of the fire regulations. So that's another thing that we had to deal with. And then also on this, like HMO, we've got problems with HMOs. Now, one of the problems with HMOs, And we're actually removing some of our HMOs, by the way, because we have 4 tenants. We only do the mini-mos, never the full 6-7 people. We only put 4 people into a HMO. But what happens is there's always one scruffy bastard, right? So, and they never admit it. Oh, it's not me, it's someone else, it's someone else, it's someone else. And even worse is if you get 2 scruffy people, they never do the washing up. Oh, it's not me, I always do mine. It's them, it's them, it's them. And it's like, oh, do you know what? How about this? How about we just evict everybody? How about we just do that? Because I'm just at the point now. Maybe it's an age thing. I turned 50 this year. Maybe I'm like, oh, do you know, fuck this. I can't be bothered with this. How about this? How about we just evict everybody and off you go. And go live somewhere else. So we sent the cleaner in. The cleaner did an amazing job on Sunday. And then we went in yesterday to prepare the house for a viewing. Pots and pans everywhere. The hobs filthy. And I'm like, come on, guys, for God's sake. So needless to say, in the WhatsApp group, I've put some very direct comments in there as well. And if people want to leave, that's fine. Just leave. It's not a problem. We'll put different tenants in, but hopefully can keep the place nice and tidy. But it's like, you know what? How about we just get rid of HMOs? I know HMOs is what everybody wants. But unfortunately, with a HMO, like, what do you want? Do you want one family unit as a tenant? One tenancy agreement? Or do you want 4 different idiots? None can wash up. None can, take the washing out of the washer dryer. They leave it in there so somebody else has to come and take it out. They leave the pots and pans. Oh, I'll do it tomorrow. No, how about you do it after you've eaten? We went into the bathroom. Toothbrushes are there. Hair gels, razor blades, shaving cream. We remove it all. There were no personal items allowed in communal areas. You take your toilet roll with you, you take your toothbrush with you, and you put it back in your room when you're done. That's how you should be doing it. Anything that gets left, because we don't want clutter, it should be nice and clean, ready for the next person. That's how we do it. And the other thing is, if you allow personal items into the bathroom and allow them to stay there, they stay there and then they're used. And then more come, and then they stay there, and they're used, and you end up with 28 different bottles of shampoo, all empty, because the lazy bastards can't put them in the bin outside. Which then leads me to the kitchen bin, just overflown, bags next to it. I'm like, guys, there's an empty bin upstairs. You know, the bin that the bin men come and take, so you take your bag out of the bin in the kitchen, and then you put it upstairs, and you put it in the big bin. Like, you're 34. Why do I have to explain to you why or how a bin works? It's like, it's crazy. So it's like, look, do I want just one tenant, one family unit, or do I want 4 people who are incapable of emptying bins? And so that's where we're heading. And so as you progress, when we first started out 23 years ago, they're the sort of properties we were looking for. I lived there, I was round the corner, I didn't mind popping in. Now I live 1,000 miles away, and for me to pop in, it actually costs me money because I have to pay someone to go. And that really upsets me as a tight northerner. Me having to pay anybody a couple of pounds, more than a couple of pounds. If I have to pay any money per hour, I want to get a return on that money. Why am I spending this money? I want to know. But as I get older, it upsets me more and more. And now I don't need that cash as much. So it's like, how about we just convert this back over? There is another issue, of course. And that other issue is that, like on one place, we spend £304 a month on energy. And obviously, energy prices are increasing by 50%. That's an extra 150 quid. Now, I don't know why the energy is so high to begin with. Obviously, what tenants do is they turn the boiler up full, and then when they want to cool down, they open a window. Even in summer, the boiler's always on full. So we're installing the beehive. Is it beehive? So we can actually control that. But it kind of upsets me because I don't want to be a landlord that comes in and dictates, oh, you're 1 degree higher. I mean, I'm sure we won't be as bad as that. If the tenants are cold, I want them to turn the boiler up. I don't want them to be cold. But turning it up and then leaving it for 14 years at full, what are you doing? That's my money. And so it just upsets me. So anyway, we are removing most of our HMOs. And I think that'll do us for day in the life of a landlord. There's other stuff that happens on a weekly basis, and I think we'll make this part of a regular part of the Property Cashflow Show, just to give people an insight into how this stuff actually works in the real life. Now, also, I live 1,000 miles away, so it's not like it's me going round, and so maybe next week I'll talk about how do we manage it living 1,000 miles away, because actually that's quite important. Some people live, a couple of 100 miles away because we're in London and we've got northern properties. How do we manage them? We use letting agents, which invariably are shit. I don't use any letting agents for anything. I never have done, or I used to, actually, and then got bit, but I will never do it again, ever, because they're useless. And if you're a letting agent, I apologise, but that's just my experience. Okay, so what do we do? Do we keep on buying more property, or do we pay down mortgage debt? So this is a conversation I was having with my mate Dave. Everyone's got a mate called Dave. You're only 10 feet away from a Dave. So me and my mate Dave, we went to the Ivy, which is very nice in Leeds, by the way. You should definitely go if you've not been, just for the experience. The Eggs Benedict there is truly amazing. So we were talking about, do you pay down more mortgage debt, or do you just keep buying more? And it's really tough, I still really haven't got the ultimate answer to this, except for, let me just pull up my spreadsheet, we're actually doing both. That's my conclusion. But Dave was saying that I'm the only person he knows in property that's really keen on paying down debt. And I think what happens is that we've got these biases, and recency is a bias, okay? So it's called a recency bias. And the recency bias says that interest rates are low, interest rates will always be low, but I remember when interest rates weren't low, interest rates were 4 or 5%, which is still relatively low, by the way. But I remember when they were that high and the mortgages were much, much higher than they were. Are we going to go back to those days? Maybe. Obviously, they're trying to control inflation, and inflation is a big aspect that's controlled using interest rates. And so interest rates have already risen, only 0.15 to get it to a quarter point. But are they going to keep going up and up and up? Yeah, I think they probably are. So whilst other people aren't thinking about it, that's fine for them. But for me, it actually makes me feel a little bit uncomfortable. So we're actually paying down some of that mortgage debt. Now, we talked about this in yesterday's podcast. I'll give you the numbers again, because not everybody listens to everyone, obviously. So in terms of fund allocation, this is what we've got. When I talk about fund allocation, I'm going to give you percentage points, okay? So even if you just got £100 a month spare, or £100 a month that you can move into something, or if you've got £1,000, or if you've got £10,000, it's irrelevant what that pound amount is, I'm going to give you percentages. So for me, right, none of this is financial advice. For me, 10% goes into crypto. 30% goes into paying off mortgages. Now, originally it was 40 and 40, but I've changed it. It's now 30% goes into paying down mortgage debt. 50% goes into saving for new property. I'm just going to add all these up. Yeah, they do add up to 100%. I was just double checking. And then ISA. So we put money into an ISA, tax-free wrapper, goes up, you can sell it all, it comes out, it's all tax-free. That's a further 10%. So we've got 10% on crypto allocation. We buy crypto every Saturday. All goes through automatic, by the way, using Binance, Binance.com. 30% goes into paying down mortgage debt. 50% goes into saving for a new property purchase, so the next buy to let. And obviously when that one comes in, if that's got £300 profit, 10% of that, so £30 goes to crypto, £90 goes to paying off a mortgage, £150 goes to saving, and £30 goes into ISA. So if that's got a profit of £300 when we buy that next one, and when we buy the next one after that, and the next one after that, and the next one after that. So what happens is that the gap between what you owe and the value of your property, so you're increasing wealth. This middle bit here, the equity, is your wealth. That's how much you're actually worth. Now, that's nothing to do with cash flow. You can be a millionaire and still skin. And boy, trust me on that, for the first 15 years, I had millionaire status and I had zero cash. Because for equity, it wasn't enough, because you had all these bills and service charges and so on. So you have to reach a point where the rents go up high enough, so then you can start earning enough money. And obviously we hit that some time ago, and that's where we are. And so we are doing a mixture of both. We do... some people just want to pay down debt, and in the olden days, that is what we would do as well. We wouldn't pay any debt down. The reason why we wouldn't pay any debt down is because we could offset the mortgage interest against our rental income. Obviously, Section 24 kicks in. Carrying large amounts of interest-only debt, mortgage debt, it serves zero purpose. The only purpose it serves is being able to use that for buying more property. If you've got £100,000 property and you pay it off, you have to save up 100 grand for the next property, right? Or if you refinance that 100 grand property and have 20 grand each, you've got 5 more buy-to-let properties. And that's exactly what we did. We used to refinance everything, pull it all out and buy more. That's how we grew the portfolio. Now, of course, and we're 23 years in, so our goals have changed. We're not as young as we used to be. We want to change the way we do it. But now we're like, how about we slow down buying more property, but we actually pay down some of this mortgage debt? And in another 25 years, it all won't be paid off because paying off 30% isn't enough. So at some point, we'll have to sell some of those properties to pay off the rest of the properties if that's what we want to do. And so who knows what we're going to do with that. But we'll deal with that when we get there. But that's what we're doing now. 30% goes on paying down and 50% goes on allocation to new property. So finally, how do you get started? Big question, isn't it? I mean, it's like so many different aspects. Are you buying to sell? Are you buying to rent? Are you rent to renting? Are you lease options? Are you gonna do an assisted sale where they've got the house and you do you might exchange on it? You do a key undertaking where you do the works and then you line up an investor to buy that because you converted it to a HMO, and then you allocate that exchanged contract. It's got a little clause in there which allows you to sell that on to someone else, and so you can transfer the contract for 10 grand or 20 grand or whatever it's going to be, and that's how you make your money. There's all sorts of different ways of doing it, and so obviously you need to get some training on that. The property sourcing training is down below, which talks about all that stuff, by the way. But I think fundamentally, before you even get to that point, you've got to talk about money. Like, you've got to understand, how much money have you got? Where's the money coming from? How much money are you going to need? And you might look on Rightmove, you might find a 70 grand property, if it still exists. Bradford came up as number 3rd cheapest place to live in the UK, rent-wise. There's cheap properties everywhere, North East, Bradford, and so on. You can still get properties under 100 grand. Don't listen to these people say, there's no properties. Average property price is 223. Yeah, average. Average, mate. I mean, some properties are worth 70 grand and some properties are worth 50 million. It's an average. They're all taken into account. But really, fundamentally, I think this comes down to you being able to afford the deposits and all of that kind of thing. If you can't afford deposits, and it's not even about deposits, can you afford the solicitor's fees? Can you afford to go on the training courses? And I'm not a big lover these days of spending a lot of money on expensive training courses, not when you've got like a £27 property sourcing training. But what else is there that you can do to go generate more cash? And have you got 12-month cash flow forecast, which is what we covered yesterday in yesterday's podcast? And if you've got none of those things and you want to get into property, I would actually just give up on that dream and go get a nice job somewhere and concentrate on that, get skilled up and improve your job and up your pension. Because this is what it needs for you to be. We've been in this game for 23 years. We've gone through all sorts of shit. We've had cannabis farms. We've had where we went through and we didn't pay mortgages. We didn't pay end power. We owed 4 grand. We owed so much money on credit cards. And I was going through my separation, and all the money just went on solicitors, and I didn't care. We nearly lost everything. I mean, we've gone through all of it, right? And after all that experience, I can tell you that the thing that really saved us was getting a budget, understanding where's the money going to come from to pay for all this stuff, and how much money do we need to buy the things that we want to buy, properties, assets, crypto, where's it coming from? And the spreadsheet really helps us do that. So fundamentally, before you even get to buying to rent, looking on Rightmove and all that exciting stuff, if you've not got a spreadsheet and if you've not got a plan of action to get upskilled and so you can start increasing your income upwards and start cutting your costs downwards, remember, gap in the middle, that bit is what you're saving, you're moving over to one side. That's the bit of money that's going to get you started on this journey. If you've not got that in place, you're not going to be successful in this game. It really is, for me, as black and white as that. Now, if you've not got that and you're doing okay, trust me on this, when I say this, you would do far, far better with all of that stuff in place than you have so far. People say George Best, amazing footballer. He smoked, he drank, and he was out with the ladies. But imagine how good he was, right? Then imagine how good he is without the late nights, without the smoking, without the drinking. Imagine how much better, even if it's 2% better, 2% of genius better is a much better genius, And so it's fine doing all this exciting stuff and all this funky stuff, but you've got to go back to basics and get all that stuff done as well. Anyway, my painters and decorators are about to turn up, so we've been going for ages. So look, I hope that's useful for you. We'll catch up with you on the next one. My name's Dan Latto. Have yourselves a good day. Take care.